silver
Yeah.
rallied 50-60% in this year,
Yes.
while your Nifty remains flattish. What
Exactly.
is going on with these metals?
Something is going on which a lot of people of us are not aware about. The Chinese central bank and China have started not only buying gold but started taking possession of physical gold. Lot of physical gold has moved out from where it was supposed to be stored, and everybody wants to have that physical gold. In Mumbai, I'm speaking to jewelers, and they are saying that there is actually a shortage of physical gold.
What's your take on silver? A, why is that happening, and do you think it will continue?
Every electronic item we are using, our mobile phone in our hand, our tab, our laptop, they are using gold and they are also using silver. If I am investing, it makes no sense to buy the physical metal, even in gold, even in silver. Buy the ETF, buy the gold bond, or buy the fund of funds from the mutual fund, because you are getting actual price. There is one category of funds that is outperforming all other funds. It is 50-50 gold silver. Take 100 rupees, 50 goes to silver, 50 goes to gold. Whenever gold to silver ratio, which means price of 1 ounce of gold upon the price of 1 ounce of silver, goes above 80, silver is supposed to be undervalued. And at some point, it will start outperforming gold. Will silver keep on rising forever? Clearly, the answer is
Hi Deepak, welcome back to Power of Money. It's been a while now. How have you been?
thank you, Navda. Thank you for inviting me. And yes, happy to be back.
And Deepak, without any delay, I'll just directly come to the biggest question that all of our investors are right now having.
Yes.
Gold and silver
Yeah.
rallied 50-60% in this year,
Yes.
while your Nifty remains flattish. What
Exactly.
is going on with these metals? Tell us more on that.
So, one or two things that are important to know and understand. There is this term called de dollarization. A lot of countries in the world have decided to come together and tell each other that, you know what, it's time that we decouple from the dollar, we get away from the dollar, and we start trading or exchanging our goods in our own currency. That is one. The second thing is, ever since President Trump has come to the US, a lot of things are happening which a lot of countries are afraid of, which means they don't know what is going to happen. Suddenly, at one night, this guy will get up and he will tweet that, I'm having sanctions against this country, or this is what I'm going to do, or this is what is going to happen. There is complete confusion. So, what to do? What a lot of central banks, and what you get to hear is China, the Chinese central bank and China have started not only buying gold but started taking possession of physical gold. Now,
Hmm.
in old times, and when I say old times, up to a few years ago also, everybody kept their gold in vaults in London, right? So that was considered to be a storehouse. So whenever you wanted physical possession of the gold, people said, "Send me this much gold of mine, which is lying with you." These were custodians, safekeeping. Suddenly, in the last 6, 8, 10 months, everybody from every corner in the world is asking all these custodians, "Send me my gold." So a lot of physical gold has moved out from where it was supposed to be stored, and everybody wants to have that physical gold in their hands, in their possession. This is what is happening now. From what I hear, in Mumbai, I'm speaking to jewelers, and they are saying that there is actually a shortage of physical gold. Now, this is
Okay.
surprising. It is Diwali
Yeah,
season, festival season. What
correct.
they mean by shortage is, of course, they have a shop and there is enough stock, people will come and buy. Now, when people come and buy, the jeweler will now go and replenish the stock. He'll buy something more
Hmm.
so that new bangles, new jewelry, new designs can be created. There, people are saying that there is a shortage of physical gold. So, if this is coming from, as they say, the horse's mouth, which means the actual
Hmm.
user, the actual seller, the jeweler, there is something is going on which a lot of people of us are not aware about. Having said that, we can only react to world headlines and try and say this is the place to be right now.
So if you're saying that, we are hearing that there is shortage of physical gold, then by the, basic of demand supply, the
Yes.
prices should go even higher. Is
Yes.
that what you feel like is the sentiment right now?
So let's understand two things. There is something called a gold miner, someone who digs deep down into the earth and then takes out the gold from there. Now, we all know gold is not available in chunks, it is available in small, small pieces, and you have to go really deep. There is a huge refining process, and you move tons and tons of rock, and you probably get a few grams of gold. That is how difficult it is to extract gold from
Hmm.
the earth. Now, there is a basic cost associated to doing that much, which means if I want 10 grams of gold or if I want 1 ounce of gold, this is my cost in bringing that gold out. As long as the retail price of gold is below that, it gives no incentive to that miner, to that company to search for more gold. So
Hmm.
let's assume just as a round figure, 10 grams gold today is approximately 1,15,000, 1,20,000. To
Hmm.
extract 10 grams of gold, if it costs 1 lakh rupees and if it sells at 1 lakh rupees, there is no incentive for the person who's mining it. However,
Hmm.
if the extraction cost is 1 lakh and the market price is now 140, 150, much higher,
Hmm.
then it gives these people more incentive to search for more gold and take it out of the ground. So that is
Hmm.
how the demand and supply works. The market
Right.
price needs to be substantially higher than the mining price of gold.
Right, right. So again, then that brings me to the point that if indeed there is a supply constraint, the market price will is expected to go even higher,
Yes,
right?
yes,
Interesting, interesting. And Deepak, I think gold. We discuss a lot about gold, and particularly in Indian households.
yes,
Any which ways, even without this context, also I assume everyone would go ahead and buy gold this Diwali. But I wanted your take on silver, particularly
yes,
because for the last so many years, silver has been, I would say, in a certain range. But
yes,
only in this year or the last 1 year,
yeah,
it has sort of broken out, and today it's trending at, I think, 1.3 or 1.5
yeah,
lakhs.
yeah.
So what's your take on silver? A, why is that happening? And second, what do you like, do you think it will continue?
Yeah. So there are these metals that are called precious metals: gold,
Hmm.
silver, then there is platinum, and then there is always palladium. But these two are
Right.
lesser known, platinum and palladium. So in the pecking order, gold is right on top, and then it is silver. Now, all of us know that gold and silver both have uses, which means it is just isn't something which you store. Gold is something you wear, silver is something you probably gift, but
Hmm.
silver is used in industrial applications. Every time you go for an
Right.
X-ray, silver is used. That every electronic item we are using, our mobile phone in our hand, our tab, our laptop, they are using gold and they are also using silver in the PCBs to get those contacts and contracts. Okay, so silver is a metal which is actively being used, which
Hmm.
also means that even if I stop buying silver as an investment, there is a whole electronics and other industry out there, especially solar panels. You can't
Right.
create energy without silver being there in that panel. If I stop buying silver, is the demand of silver going to go away? Answer is no. Because these
Hmm.
industries require silver to survive. Without that, these things can't be produced, these things can't be processed. So,
Right.
second question is, the logical question is, what happens to silver? And will the price keep on increasing forever?
Yes, yes,
That
that's the
brings us
big
back
question.
to that original argument. As the
Hmm.
demand for any precious metal increases, the supplier, the creator, the miner will now start mining for it more because he or she knows I will get a better
Hmm.
value. As soon as there is more stock, price will come down. Also, the most important thing for all of us as investors. See, we are not talking about using silver as as a manufacturing thing. We are talking
Hmm.
about silver so that I can buy and keep it. And because the prices are rising, I will sell it at a profit. So you could call us ourselves, either speculators or even traders. We aren't actual users.
Hmm. Right. No, so I think for silver, given the whole industrial usage, right?
Yes, yes,
As you rightly said, even if we don't sort of contribute to the supply, there's a big industry that's coming in the last 1 year that sort of is pushing the demand for this. And
yes,
with the supply being limited, that's
yeah,
what is driving those prices.
yes,
Now, my question is that where do you foresee there are certain industrial use cases. So
yeah,
I another way to put it is, where do you see these industries going?
Yeah.
Because is this on a rising trend for the next 2, 3, 5 years?
Yes. So let's understand this as as an item that is critical to manufacture the component, whether it is a solar panel, whether it is electronics, whether it is in medical healthcare. The price of silver is X. Let's assume the
Hmm.
price of silver moves from X to 3X. It doubles in 3 years. Will I stop manufacturing? Answer is no. Will I stop taking an X-ray? Answer is no. That cost will simply get passed on to the user, the last, the person in the last. जिसे कहते हैं in हिंदी में जैसे कमजोर कड़ी आखिरी कड़ी, the last link in the chain. That is the
Yeah.
person who will keep on paying for the cost of that silver. Will silver
Hmm.
keep on rising forever? Clearly, the answer is no. At every mania or at every bubble,
Hmm.
there is a point where it is going to get pricked and it is going to get worse. Now, is
Hmm.
this a mania? I'm not too sure it's a mania. But can you justify an 80% rise of silver in 1 year? Year to date. Year to date, people are saying that it is up 80% plus. Does it
Yeah.
justify going up 80%? Answer is no. It doesn't justify. There is excessive demand and speculators are coming in, and people like you and me who are investors who don't understand a lot, but we want to
Hmm.
ride that wave. We will all come in the end. So at some
Right.
point, somebody will be, holding the baby in the end. Who will it be? God
Right.
only knows. Yeah.
Fair. No, so fair. I think while there will be a correction, but fundamentally because the demand will increase. I mean, given the limited supply, I was also reading, I think there's been shortage of silver for the last consecutive 5 years in the world, right? I think that's where I read a report.
So again, there is another way of looking at it. Let's say I am a silver supplier or a manufacturer, and there is this trend of the product which I am selling that the price is rising. Even if I have stock, no, I will not release it fully because I am
Hmm.
expecting it to rise further. So I will try
Yeah.
and hold it. Now I'm holding it as a supplier. People are holding it as speculators. That gives
Hmm.
further rise for the price to go up.
Right. So it could go either ways.
It
Like
could go
it could
either way.
also
It could go either way. Yes.
interesting perspective. So what are the jewelers saying? You told about what they are telling about gold.
Yeah.
What are they saying about silver?
So there is one thing a lot of people do not know about silver as far as physical silver is concerned. Let's say I go to a jeweler and buy some jewelry, bangles or some, necklace or whatever. If I buy it in gold, I have to pay something extra, which is called making charge. Fine.
Hmm.
And when I go and sell it, what will happen is I will not get the making charges and I will get the lower value because there is a buy price and there is a sell price.
Right.
So on an average, I lose approximately 3 to 4% on the upside and 3 to 4
Hmm.
percent on the downside. That is with gold, which means let's say I bought gold today for 1 lakh rupees. If after a week I go and sell it and assuming the prices are the same, I'll probably get 95. That
Hmm.
is the cut.
Correct.
That is the haircut I have to take if I sell. The problem with silver jewelry is, and a lot of people don't know about this, the haircut is 50%.
Oh,
Let's
really?
say you went and bought a silver thali or a
Hmm.
silver ornament and you paid
Hmm.
1 lakh rupees for it. Go and sell it next week. You will not get market price. You will get half.
Even if it's in a more coin format,
If
like
it is in
more.
coin form, the cut is lower. But as far as jewelry is concerned, they cut 50% flat. So the very first time I came to know this, I was really surprised. I know what is going on.
Hmm.
50% haircut is not allowed. I mean, what is going on? He said, no, market, this is how the market works. So if
And
you
what
are
is
an
the haircut, sorry,
investor,
for gold?
yeah, no, gold, as far as bricks or coins are concerned, that is considered to be 100% purity. So at the most, you will get the difference of the buy and the sell price. That's all. But
Okay.
in silver, the haircut is higher. So as an
Okay.
investor, if I am investing, it makes no sense to buy the physical metal, even in
Hmm.
gold, even in silver. Buy the ETF, buy the gold bond, or buy the fund of fund from the mutual fund because you are getting actual prices. That makes sense.
Right, right. And now that we are talking about the form factor, Deepak, would love to understand, if you could explain our audience the difference between, ETF and a bond and a fund of fund, because on the face of it, they're all electronically purchased.
Yes.
Is there one form factor that's better than the other? Could you guide us there as
Let's
well?
let's understand the three ones which you mentioned. The first one and the most easiest and the most common way to buy silver or gold electronically is to go online. If you have a demat account, go online and search for a silver or a gold ETF. Most
Hmm.
mutual funds have an ETF which is listed on the market, and its price changes tick by tick, which means every minute, whenever a trade happens, there is a buy and a sell. Whoever wants to buy buys it at that price, the seller sells it at that price. So if
Hmm.
I'm looking to buy silver today, I log into my demat account, I check for silver ETF. I will find there are probably 10, 15, 20 mutual funds who have a silver ETF. Most of them will be having a slight difference in price. So let's assume someone is 10, somebody may be 10, somebody may be 10, 15, somebody may be 990. I buy
Hmm.
the silver ETF and that unit gets credited into my demat account. Now let's
Yeah.
understand it simple. If I buy 1 lakh rupee worth of silver ETF today, and today market price of silver is 1 lakh. 3 months later, silver moves up by 10%. It goes from 1 lakh to 110. My
Hmm.
ETF value will also move up from 1 to 110. So there is a direct correlation of the ETF's price with the market price of that particular commodity. Okay. Now,
Okay.
again, here there will be that buy and sell arbitrage. So there will be a very small difference when you sell it. And of course, whenever you buy and sell, there will be some taxation issues, which are later. But this is to understand as an investor how I can buy this commodity. Just like there is a silver ETF, there is a gold ETF. Now, up to some time back, there was something called a sovereign gold bond, which
Right.
unfortunately the government had stopped
Discontinued. Hmm.
issuing. Excellent
Hmm.
product to invest in gold, sovereign gold bond. What did it say? Buy gold bond from me today. I am issuing it to you today at market price. After X number of years, whatever is the price of gold on that particular day, I will give you that price. In
Right.
addition to that, if you hold it till the end, your gains are going to be totally tax free.
Yeah,
And
that was a big plus point.
yes,
Yes.
and I will give you 2.5% interest every year for holding on to this. Now
Wow.
imagine if I'm buying physical gold, I am worried about storing it in my house, putting it in the bank locker, paying rent, not 100% sure about its purity. When I go to sell it, I get a lower price. The sovereign gold bond did away with all those problems. The government said, give me the money. I will give you the market rent when it matures. You will not pay any taxes and I will give you 2.5% interest. Wonderful
Yeah.
instrument. However, the government now realized this is too good to be true and let's close it.
Oh,
However, sovereign gold bonds are still available on the stock exchange, which means you can actually buy a SGB sovereign gold bond, which was issued a few years ago. It is traded on the market. Only thing what will happen is because you didn't buy it when it was issued initially, when it matures and if you make a gain, you will pay tax on it. Otherwise, SGB is
oh,
still an option available to invest in gold. Search for sovereign gold
oh.
bond. You will get multiple series. So if let's say in 2021 there were 5 series, you will find
Hmm.
2021 Jan, 2021 March, whatever, all those 5 series. And every bond will have a slightly different price because it was issued at that time at a different rate. So whoever is
Okay.
selling wants to take the maximum profits out of it. So there will be a variation in the price.
So it will be basically adjusted to the current price
Current
of
market
gold,
value. Yes.
and I can buy. So if I
Yes.
am holding a SGB, I can also sell it on the market. That
Yes. So
means.
the idea of having a SGB is to hold it till maturity because you're going to get
Hmm.
tax free returns. However, if you want liquidity, you are in urgent need of money, sell it on the stock exchange. And in
Oh,
today's day and age, people are ready to buy.
very interesting. And it's very liquid, like the
Oh,
entire.
oh, bilkul, bilkul. If you just put it up for sale, immediately it will get traded. There are people waiting to buy your
Interesting. No, I will not let my tax-free
bond.
returns go. I will hold
Most
on to them.
important, most important. And the third part, all these mutual funds, in addition to having an ETF, have got something called a ETF fund of fund, which means,
Hmm.
let's say
Correct.
I am ABCD mutual fund and I have
Hmm.
issued a silver ETF or a gold ETF. I will have a silver ETF fund of fund. This
Hmm.
ETF fund of fund tracks the ETF of that mutual fund directly. The only
Hmm.
difference in investing in a ETF fund of fund is this: there is only one price at the end of the day. When
Okay.
you are buying it on the stock exchange, the price is taking tick by tick, tick by tick. Every moment the price
Mhm.
is changing. The price for a fund of fund from a mutual fund is the NAV which is declared at the end of the day. So if I buy ETF now and let's say price is 10.20, if I buy the fund of fund, it's possible that the price at the end of the day may be 10.25, maybe even
Okay.
10.30. So in ETF you
Got
will get tick by tick price, second by second it will change. In the mutual fund you will get only one NAV at the end of the day. Now, a lot of
got it.
people tell me, why should I buy the FOF why, when the ETF is trading directly on the stock exchange? Only one thing is there. There will be times, and just now there is this bullish sentiment, so this will not be a problem. But there are times when you have ETF units, and if you want to sell it, sometimes they don't sell. Sometimes you don't
Okay.
get the matching price. If I sell my mutual fund units to the mutual fund, it is bound to give me money in the next 2 days. That's the way the
Oh,
system is designed. So, as far as liquidity and getting the right price is concerned, it's always better to have the fund of fund from the mutual.
got it. And from a returns perspective, it's only a marginal difference because I am not accounting for the daily
Exactly,
variation pretty
exactly,
much.
exactly. Yeah.
Understood. And the taxation also works similarly for
The
both these
taxation is actually
instruments?
better now in the fund of fund. Of course, it works the same because the commodity is the same. But now, after the recent budget, the taxation for long-term gains for all these silver and gold also has become 12.5% long-term capital gains. So this is good. It is a good
Right.
investment. Yeah.
But it's the same for whether I buy via
Yes.
ETF or
ETF
via
or
the fund
FOF.
of fund.
Correct. Correct.
Interesting, interesting. So I think we spoke about the reasons behind the gold and silver rally. We spoke
Yes.
about how to buy. Now that we want to capture onto this,
Yes.
I think a big question is, I understand the reasons for gold in terms of, gold has always been that safe haven, and
Yes.
central banks are buying this,
Yeah.
because of all the geopolitical uncertainty, etc.
Yes.
While
Yeah.
for silver, the reasons are quite different.
Yes.
It's more demand led.
Yes.
So my question is, do you think silver will or has the potential to also become like the safe haven like gold?
Okay. So gold, as they say, in time immemorial, even if you go
Yeah.
back 5,000 to 6,000 years, there are these stories and there are these drawings and there is historical records of gold being used as a value store value even in those days. When we
Yes.
were growing
Raja
up, our
Maharaja ke time
Dada,
pe.
yes,
Correct.
our grandmothers and mothers, you know what? Actually, our grandmothers and mothers have really made us rich. Why?
I agree totally.
Of
Totally. Now I appreciate so much.
let me tell you this story of mine. Ever since we got married, whenever there was an occasion, my wife used to say, please buy me some gold. I used to tell her, why you want to buy gold? Let's put it in a mutual fund and we will make
Yeah.
better returns. And then she used to say, if I'm going to a party, I can't wear a statement of account. I have to wear the jewelry.
True, true.
and
And now look at the returns.
and I used to always tell her, you know what? Mutual fund returns will always be better than gold. Last 6 months, I am the one who has been receiving at the receiving end from her. See, I told you. See, my mother told you.
Yeah. So I
So
think
hats
the
off to
beauty
all
of
the ladies. Hats off to all the women.
absolutely.
Yes,
Absolutely. I think the beauty of jewelry is also because you have so much sentimental value attached to it. You don't sell and ends up being with you for like 10, 20 years so that when you actually have to use the money, it just compounds greatly. I've seen that happen like for my
yes,
mom as well. So
yes.
I think
And
that's the
and
beauty.
I just want to take up from what you said. You don't sell. So I ask a lot of people, a lot of investors. I get to meet a lot of them, and I tell them, why do you want to invest in gold? And they say, you know what? I can sell gold even if I need the money at 12 o'clock in the night. So that is the
Hmm.
perceived liquidity of gold. That is the perceived liquidity. Then I ask them, when did you last sell your gold? And nobody raises a hand because nobody knows, because nobody wants to sell their gold. If I
True.
have asked 3 or 4,000, 5,000 people, have you ever sold gold? Only one person I know actually sold that gold of theirs. And there is a story to this. This is an aunt of mine who was a widow, and her in-laws didn't take care of her. Her side people also didn't take care of her, so we were managing her and her finances. Suddenly, one day she was struck by cancer and she decided, no, I am alone. I don't have children. I have all this jewelry with me, which I have kept for so many years. When will I use this? Take this,
Hmm.
go and sell it in the market, and I will spend my own money for my treatment. So, in my whole life, let me tell you, I have seen only one person sell that gold. And that is what has worked for all of us, the
Yep.
compounding factor. We always bought it and we never sold it. And we are sitting on, there is really no estimate of how much total gold is there in Indian family households. But it is believed that it is more than all the other gold in the world which other people have.
Yes.
China and India have the maximum household gold.
Yes, yes. I also read that somewhere.
Yeah,
Yeah. So I think coming back to this concept of, gold being treated as safe haven, not just India, like from
yeah,
a financial sense, but just countries all over the world. Do
yeah.
you think silver can has the potential to become that?
So let's go back in history. Silver today is very, very close to a point where in the last 15, 20 years, even 30 years, twice, it has reached this level close to $50 and it has fallen. And when it
Hmm.
has fallen massively, which means people who entered right at the top lost a lot of money if they weren't nimble footed. So, if the question is, should I be buying silver at this time? If you are going to buy it and if you are going to keep it for the foreseeable future, if I was you, I would buy it in parts, which means let's say I've got 1 lakh rupees to invest in silver, put it as 10,000 rupee every week for the next 10 weeks, or 5
Hmm.
5,000 rupees every week for the next 20 weeks, because nobody knows what is going to happen. Entering at a price when a commodity is up almost 50 to 70% in a year, 80%
Yes.
plus, is extremely risky. Same goes for
Hmm.
gold.
Right. So, what's your verdict for this Diwali? I was also reading about this GSR, gold silver ratio, right?
Yes.
Usually that's seen as a predictor of, whether what is overpriced and what to go into. What's your view on that
So
as well?
it says there is something called the rule of 80 to 50. It states that whenever gold to silver ratio, which means price of 1 ounce of gold upon the price of 1 ounce of silver, goes above 80, silver is supposed to be undervalued. And at some
Hmm.
point, it will start outperforming gold. So whenever this
Hmm.
ratio goes below 50, gold is supposed to be undervalued. See, these are all
Okay.
mathematical equations and numbers, and a lot of people try
Hmm.
to justify their views. I can
Hmm.
tell you there is nobody who knows anything as to what is happening to the prices. If I stand up here and say, you know what, gold prices are going to go up, it's like that broken clock. A broken clock is right twice in a day.
Mhm.
So nobody knows what is going to happen. However, a lot of big investors are putting their money in gold and silver. The fact that these guys are doing it, I think it makes sense
Hmm.
for us to have some allocation to gold. And again, because of our mothers and grandmothers, the thing with us is we've never valued our family heirlooms, our family gold.
Hmm.
Whatever gold or jewelry is there is either there in the locker or it's there in the cupboard. We've never gone to a jeweler and told him or her, weigh this, tell me
Right.
today's value. No, because we bought it forever. So whether gold is going to go up or not, if I am a user and an investor, any time is a good time to buy.
Fair, fair. So you think the tradition of gold on Diwali should
Should
continue this year
continue,
as well?
continue. See, the only thing is this: the fact that there is a tradition, which means our forefathers, our grandfathers, and their grandfathers had some sort of a thought process, something in mind, where they instilled this in us that on Akshay Tritiya, on Diwali, on festival occasions, buy gold. They knew something probably we don't.
Right, right. And for silver, what I understand is, slightly be a little cautious because, the in the history when it has touched the $50 mark,
Yeah.
it has crashed.
Yes.
Though the fundamentals look positive given the whole demand increase,
Yeah.
but it's still slightly caution.
Yeah.
Um, yeah, got it, got it. And I think the last note, as an investor, not as a user,
Yeah.
how much do you think an investor should allocate to gold and silver? Given I know this is a recency bias, but overall, we are in it for the long term. So, what's your take?
So up to 2 or 3, even 3 4 years, just before COVID, because a lot changed
Hmm.
after COVID. Just before COVID, everybody used to tell us that gold allocation should be between 7 8%, 5 to 7
Hmm.
percent of your normal portfolio. Now we all know that if we actually took into account our household jewelry, our gold would have probably been 20 or maybe even 30% of our total portfolio. But that was
Hmm.
never valued. As an investment, if I'm investing into a gold fund or a sovereign gold bond or even an ETF, it is now being recommended that we should have anywhere between 15 to 20% total exposure to both these metals. So let's say
Okay.
if I want to have 20 rupees out of my 100 rupees in my portfolio as commodity precious metal exposure, have 10% to gold, have 10% to silver. I think it makes sense.
Got it. Got it. No, I agree. And I think while the last 1 3 year returns have been, of course, outperforming Nifty, but I was
Yeah.
just looking back at data like 10 years, right?
Yes.
If you look at
Yes.
about 10 12 years, 15-year landscape, it's
Yes.
pretty much at par. And you would want to diversify your sort of portfolio across all different kinds of category, equity, debt, and commodities. So makes sense. Yeah.
If you've noticed, and as you said when we started this program, you said that most equity fund returns are close to zero. Some many are minus 3 4 5%. There is one category of funds that is outperforming all other funds, that is multi-asset funds. Multi-asset
Hmm.
funds have got equity, they've got debt, they've got gold, silver, and
Right.
some other
Right.
commodities too. So that is what has happened. That shine, which was not there from equity, has come in from these precious metals, and these funds have performed well, which takes us to this part, asset allocation. It is
Right.
important to have asset allocation in your overall portfolio, where when one part of your portfolio doesn't perform, it is this other part which is definitely going to perform. What it will do is it will probably pull down your returns from 18 to 15, but I'm happy getting 15, 15, 15 every year rather getting 12, 8, and then 20.
Correct, correct. No, absolutely. And I think that's the right note and the right message to sort of end this conversation on, Deepak. And thank you so much for taking out the time. A good balanced portfolio. The fundamentals look strong, but, a slight caution when it
Yes,
comes to, especially to silver.
yes.
We'll be on the lookout. And I think this Diwali, we'll probably do the 10% to gold and silver this time
There
around.
is actually one fund in the industry which was launched just one month back. It is 50-50 gold silver. So you don't need to go,
Oh,
and buy silver separately and buy gold separately. You can actually from one fund take 100 rupees, 50 goes to silver, 50 goes to gold. That is a good option.
oh, interesting.
Yes,
Interesting. I'll definitely look it up.
yes.
Great, Deepak. Thank you so much for your time, and wish you a very happy Diwali in advance.
To you too.